Hello, everyone. Today we're going to be looking at Bitcoin's price action. We're going to be seeing what's transpired in the market over the last 24 hours. We're going to talk through whether there are any trade setups you could have taken advantage of based on, what we teach and what we learn here religiously. We're also going to look at the next play. All right, now, the whole crypto world and the whole of the YouTube world, they're very excited at the moment, and they're thinking, "Wow, well, Bitcoin's had this massive relief rally up. We're in price discovery mode. We've broken all-time highs. Well, at the moment, at $92,850. Bitcoin has never seen these prices before, you know. And are we headed to 100K, or are we headed to 200K, 300K? So a lot of people are thinking, well, is this the time to invest in Bitcoin? That's another big question. So many people are contemplating, is this the time to invest in Bitcoin? Is it too late to invest in Bitcoin? Is this the time to take profits out of Bitcoin? All right. I'm going to be talking to you a bit about that today. And I'm also going to be giving you some insight into some of the strategies I think might be really beneficial slash fruitful in this bull market. So let's get straight into it. But first things first, big shout out to everyone who's followed the channel recently. Shout out to you guys. Appreciate the support. It's always good to know that each and every video there's a new there's just someone new who's looked at the content and thought, this is useful. So that's always good. Big shout out for to Vinyl Jane for the comment. Appreciate the support. And you guys are pretty much, I would say, probably the founding members when it comes to obviously the establishment of Trade Journal. This will go on. This will get bigger. And obviously, shout out to you guys and big up to all of you. Also, there's obviously Discord, which you can get access to. Now, Discord is great because Discord can where can you find Discord is the question. All right. If you did want to hit me up on Discord, where can you find Discord? Well, first things first, Discord can be found. I believe I've put it in the signature of most posts. So if you click on the link, there we go. If you click on any of these videos or the recent ones and you click on the link, that will take you straight to Discord. It will give you an invite into the generic Discord page. Now, on that page, you can send me a direct message. Alternatively, you can find me at tradejournal.co.uk, and we can converse there. And you can let me know, how you're getting on, and see if I can support in any way. Now, this channel is primarily based on beginner traders. If you've got, less than 3 years in the game and you're kind of just starting and you want to understand how market structure works, how trading works, and you kind of want to get past all the fluff that you see online, all the misinformation you see online, this is the place to be. So, anyways, let's get straight into the Bitcoin price action and let's talk about what's going on at the moment. Now, as of our last post, we were looking at some very, very key levels, in my opinion. We were looking at some pivotal levels, which we're going to discuss in a sec. First of all, oh, look at that. Bitcoin has had a massive move. 93. Now I'm regretting taking my profits now because I cleared out. I took my profits. I think I was in here. I got in here and I took my profits out there. Um, but anyways, we'll leave it there. More trades, right? More trades to come. But anyway, so let's see. So as of our last post, we said we're clearly in an uptrend. We're creating a series of higher highs and higher lows as per. Okay. And because we're in an uptrend, the market likes to do this thing called inertia. Now, inertia is a very, very famous concept. For those of you who are physicists, inertia is a famous concept in physics, and it's kind of linked to Newton's first law. So we're going all geek mode on you guys now. Now, Newton's first law says, right, it says anything that's in motion basically will carry on being in motion until you have an external force act on it. So what do I mean by that? Why is that relevant? Why is that notion of inertia relevant? Well, that's because when it comes to trading, it's the exact same thing. All right. If you are in an uptrend, you have a higher probability, there is a higher likelihood, there is a higher chance that you will continue to be in the uptrend. If you're in a downtrend, there is a higher chance that inertia will carry on and you will continue to be on a downtrend. All right. This is why most beginner traders are advised to follow the trend. That's where the phrase comes. The trend is your friend until the end, right? If you're in an uptrend, look for longs. If you're in a downtrend, look for shorts. Now, if you're in a range, inertia is also valid. In a range, that's why you bounce and you rebound from the range high and the range low, and the range high and the range low. It's because price likes to carry on doing what it's already doing, all right? So hence why we said we're in a uptrend, obviously, and we can see that clearly. Because if we, one quick way to realize whether you're in an uptrend or not is to simply look at your screen and say, all right, if we're taking our candlesticks or our bars from the bottom to the top, is it going up or is it going down? So here we can see that we're starting at the bottom, we're finishing at the top. It's obviously a positive gradient. It's obviously an uptrend. Anyways, what were we saying? We were saying that we're looking for a continuation then. If we're in an uptrend, we're looking for a continuation. So we're looking for that retracement to carry on up. But we did say these are key areas to look for that retracement. It doesn't necessarily have to hit those areas, right? Because Bitcoin is having this massive pump up, all right? This burst, this upthrust, which is very aggressive. A lot of bulls are stepping into the market right now, and I can't really see the bears. Bears, where are you? I can't see the bears. They are nowhere to be seen. The bulls are stepping in. We've broken out of the 238-day range, and we're constantly shooting up. So let's see, did we hit any of our levels? I don't think we did. We came close, didn't quite hit it. So we obviously rallied up, retraced down here, okay? And then we've carried on up again. So we just about missed it. It's annoying. In a minute, I'm going to check what was there. Maybe we had a zone there that we missed. I'm going to have a look at that in a sec. But in my opinion, there's been a few trades. Now, remember, we always say we don't like this initial trade here, but there was a trade set up there. There was also a trade set up here. Yeah. I got into a short there. All right. But I got into a short, and sadly, I didn't actually take profits. I did move my stop loss to break even. So as a result, I got stopped out at break even. Now there was also a long play here. This is pretty. I'm pretty sure this is at least a 5% move already. Now there was a long play here, so you could have shorted long if you were looking at the charts. So let's get straight into the analysis and let's see how that would have gone. So obviously we know that we were in this massive range. We've broken out of this range. When we break out of this range, we can either break expecting a retest, but that retest is not guaranteed. Remember what I said last week? I said Bitcoin is starting to resemble gold. All right, it's starting to resemble gold. And let's take a quick look at what gold did when it broke out of this massive, monumental, gigantic mammoth of a range. All right, so when gold broke out of its range, this was gold's range. All right, for those of you who can't see where the range is, this was gold's range. All right, now when gold broke out of the range, look at that. Boom, boom. Consolidated for a bit and then bang. All right, didn't really give you many opportunities to get in. There were chances, but we didn't really get that nice retracement that we would love to see. Maybe something that came like this and then a move up. We didn't really get that, did we? Okay, but nonetheless, you still had trades there. I promise you, you still had trades there. You probably still had trades there, and you probably still had trades there. Okay. So let's get back to Bitcoin and let's see those trades we just talked about. What are you talking about, TJ? How could you have entered those trades? I didn't see any entries. What do you want me to just click buy blindly on the app? Is that what you want? No, that's not what we want. Let's talk about it. So first things first, if we look at the price action as of the time when we made the post, obviously this is my analysis. I'll get rid of it for a sec so that we can see this clearly. So that we can see this clearly. Bum, 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 bum. Get rid of that. Get rid of that. Get rid of that. This trade is annoying me now because I should have caught that one, but I was just a bit lazy. I was actually asleep. I was actually asleep when that happened. And when you're halfway between like sleep and being awake, and you're just looking at the app like, and then bang. So now I wake up, I have a look at the chart, and it's a very clear entry there. But anyways, I think that was the trade of the day, in my opinion. That was the trade of the day. But let's talk about it. Let's see where we were. So if I just rewind, at the time of the post, let's say we were around there, you know, We've obviously been in this uptrend, this tear up. I'm going to drop to the 15-minute because I love the 15-minute. All right. And we're just going to see what has happened as far as price action goes. Okay. So far, we've only had a series of higher highs and higher lows. Remember, market structure is one of the most important things you have to understand when it comes to trading. Why? Because market structure is the heartbeat of the market. It's the impulse of the market. So you have to understand how the heart beats to understand how the organ works. All right. So here we go. So we've created a series of higher highs and high lows. Is there a reason to enter a trade yet? Nope. I don't see anything. All right. Okay. Now maybe. So what have we done now? Now we've just created another higher low. Okay. And we've created a higher high. All right. This is interesting. Not only have we done that, we've also established a range. Okay. This being your range high, this being your range low. So guess what? If we get a flip in market structure now on this internal leg, there's no reason why you should enter a short there. Okay. So let's have a look at this. Let's see what the internal leg is doing. So your internal leg, you could draw it like this. But if you drew your internal leg like this, what does that mean? That means that your decisional point, the point at which you can justify a valid short, would be there. Now we have to start to close below there before we can enter a short. But that's quite far off. So we're going to ditch that structure drawing. And then we're going to say, actually, let's take it from a more internal level where we have this, this, and that. Okay. Why have I done that? Well, A, we've got better risk to reward as far as that short goes, if it happens. All right. And B, it looks nicer. So as we play along, what happens there? Bang! We get that break in structure. We get that break in structure. We definitely close below this prior, high and low. All right, and this is good. Not only have we deviated from that high, okay, we've got this close. However, if you were to enter this trade, how would you have entered it? You probably won't have seen a close. If you're trading this on the 15-minute, you won't have seen a close until this bar closed here. Meaning, nope, that's not what we want. We want a short entry until this bar here. Okay, which means your risk to reward just to the range low is just about one to one. So you risk $1 to make $1. Is that great? Not necessarily. Not necessarily. Did we get a retracement? We did, but it wasn't a deep retracement. Our retracement was kind of the same as our entry. Now, if we got something that looked like this, if we got a nice juicy retracement up that came all the way up there, all right, that would have been a nice short. Why? Because that would have improved our risk to reward. So in my opinion, even though that was a viable trade, it's not one I would have taken. Okay. So we get that transition in market structure there. Let's see, on a 5-minute, did we have a better entry on the 5-minute? All right. Now we're talking. Why? Because on the 5-minute, we have a better entry on the 5-minute. Remember, I said this is a trade I didn't take. So hence why, I haven't looked at this prior. Because on a 5-minute, our structure looks like this, perhaps. Let me get rid of this for now. On the 5-minute, the structure looks like this. So we have higher high, higher low, higher high, higher low. That's questionable, but we'll go with it. High high, high low, followed by high high, followed by high low, followed by another high high, which sweeps the initial high. We love to see that. And then a break of structure, and then a retracement, and then the flush down. Okay? So on the 5-minute, we 100% could have capitalized off that move. We could have entered off of the close here. That's our first, point of engagement. That would have given us a nice 3.6 risk to reward. Or we could have waited for our retracement and had a better entry there. Okay, giving us a nice 6 risk reward. Good trade, in my opinion. All right. So on a 5-minute, that would have been the best time frame to enter that one. All right. So let's carry on going. So now, also, looking at this, I'm thinking to myself, this is what I was actually thinking when I saw this. I was thinking, this is interesting. I was thinking, well, we have a tap number 1 at the high. We have a tap number 2. So obviously the bulls are losing some sort of strength here, aren't they? Because ideally what we want to see is we want to see that impulse, a retracement, an impulse, a retracement, and then another impulse. But we didn't quite get that. Instead, we either had some bulls take profits or we had some bears step in. And so what happened there started to make me think, could this be where we get that transition? Could this be where we get that range? All right, before we start to distribute to head down. Oh, Bitcoin just hit 93K. Great, good stuff. All right. And not only could that be the case, could our market structure actually resemble this? So we have a high, a low, a high, which sweeps the initial high, all right? Breaking structure, yeah. Now we have that breaking structure for retracement for continuation, giving us a nice Trinity model. Did you get it right? Was it a model 1 or model 2? It's a nice Trinity model 2 where we have tap number 1, tap number 2, tap number 3. But in order to get that and have that be validated, we need to see a convincing break below this low. All right. But did we see a convincing break below that low is the question. That was the question. Now we're going to investigate to see whether that actually happened. Or if this is our low in question, this is the decisional level. This is the point where we're going to justify this trade. We're going to check now to see whether we got a close below that level. Okay, good. So on the 15-minute, it looks like we've got a partial close. Okay, but all you have to do is just click the 24-minute. Okay, on the 24-minute, we still looks like we got a close. On the 30-minute, all of a sudden it's no longer a close, it's a wick. It's no longer a close, it's a wick. All right. So now let's look at the 45-minute. It's a wick. So what does that mean? That means price has not officially closed below that level. Not only does it mean that, it also means that there is a high chance we get a rotation back to this high. All right. So as a result, what I did then is I said, okay, cool. And the price is starting to head up. Could we have entered a long here? Now, as far as that long goes, well, let's follow the market structure. Did we get a confirmation at that range low? Well, the structure at the moment, if we get rid of all this stuff, okay, so the structure at the moment looks like this on the way down. So let's just tidy this up so you guys can see what I'm saying. Oh, today's going to be a tight one because I need to speed up because we're 16 minutes in already. All right, so the structure on the way down looks like this, doesn't it? It looks like this. Low, 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 high, low, 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 high, low, 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 high, low, low. So as of now, you can't really justify a trade until we lose this level, okay? So you can't really justify it. You can enter it, but you can't justify it, all right? Now, we didn't lose that level. We keep waiting, we keep waiting, we keep waiting. And then bang, now we've lost that level, all right? So now we have closed above that prior level. Let's look at a lower time frame. Did we get a confirmation? Perhaps on a 5-minute? Okay, so on a 5-minute, you did get a confirmation. Yeah, you got a confirmation a little bit sooner, especially after you wicked the bottom, because your 5-minute structure looks like this: low, 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 high, low, 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 high, low, low, and then you get the breaking structure here, and then you get the retracement here. So on the 5-minute, if we looked at the 5-minute, um, more closely, we can see that you got a flip in market structure here. That was your flip. And then you got a nice retracement all the way down. So you got your structure looking like this: low, 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 high, low, low, higher, high, higher, low. This would have been your entry. And then you swung that up. All right. And if you did that, I'm sure that would have been a 3 to 4x. Okay. Okay. So now we've had that, all right, but we're aware that obviously this level didn't really close below the level that we were looking for. So that Trinity model 2, even though it's viable, it may fail. It just may fail. Why? Because we didn't really get that decisive close that we were after. Instead, we also started to get a nice little accumulation model here, all right, where we have tap 1, tap 2, and potentially a tap 3. But these are more tricky to play. So what happened there? And in that case, what I said is, well, I'm going to look at my structure and see, do I have any supply and demand zones in premium or discount? And what I found is that I found a nice. Remember, this is a trade I said I actually entered. I didn't enter any of those first two. This is the one I entered. I found a nice little demand zone over here. Okay, and then I said, all right, fair enough. Let's see if that work. All right. Not only is it a demand zone, it's a demand zone that's in discount. Okay, it's in the top 50% of our range. So what am I looking for now? It's basic, guys. Basic. Higher high, higher low, higher high, higher low, higher high. All right. So look, we're in premium. Okay, so we can justify shorts. If we get a flipping market structure here now, why not enter a short? And did we get a flipping market structure? Of course we did. Bang! Look at that flip. That was the flip there. So now we've transitioned market structure now. So all we need now is we can enter after a transition, but for better risk to reward, we might want a tiny retracement. So that retracement, it wasn't very deep, but it did come back to mitigate that old supply zone. So that entry model would have meant we entered a trade right around there. Okay. But now this short was good, but it was short lived. Why? Because the short. This is where, remember I said I entered this short, so I definitely entered this short last night, and then I was in it. I was in it. Okay, and then all of this happened. So we got down here with good profits. All right, not stupid profits, but good profits. 2.5 risk to reward. All right. And then at this point, I said, you know what? I've broken market structure successively on the way down. I'm going to move my stop loss to entry. So I'm going to de-risk this trade. So even though I lose this trade, I'm not losing any money. All right. And then I went to sleep today for some reason. And then we had a flip in market structure again, a flip taking place right here. Okay. So we had a flip in structure here. It was a bit of a weird flip because when this flip was happening, I thought, it's not really a convincing break, but it's still a break nonetheless. All right. And then what happened? It was bang. That's what happened. All right. And that was it. So that stopped me out of my trade. And because I was stopped out, I left that one with no profits. Actually, I think I lost a tiny bit from that one, just like because of exchange fees and so on. But this is where we are. We are where we are. All right. But guys, I'm going to show you something that very very good strategy you can employ if you have Market Cipher. Now, this is why I tell you guys to get Market Cipher as soon as you can. Okay, Market Cipher is a great way to predict. Oh, look at that. Look at that. Oh, should I get in? Should I get in? No, I'm not going to FOMO into that. But we do want to see a nice retracement. Let it come. Let it come. Come back down, please. But anyways, let me show you this quickly. This is something I haven't showed in the past. You know, I've been doing this for a while now. And this is definitely something I haven't showed in a long while. Look, whenever you have a continuation range, all right, what's a continuation range? Where you have an impulse, you range, and then price does this, and then it goes bang. Yeah. Whenever you get something like this being your range, all right. Market Cipher tends to print a nice little 45-minute hidden bullish divergence. What do I mean by that? What I mean by that is if this is Market Cipher, let's say this is Market Cipher in red, what you get is you get a nice wave. The second wave is successively deeper, all right? And as that second wave is deeper, you get your structure points, your swing points, which are tending up. So what that means is here you have your hidden bullish divergence. Okay, feel free to research that on Google, search that up, and you can get more information on that. Classic hidden bullish divergence. Now, this is monumental because on the 45-minute, when you see this on a 45-minute, it usually shows you that there's about to be a continuation play. And not only does it show you there's about to be a continuation play, if you back test this, you can see that over 70% of the time, that continuation play is going to lead to about or at least a 4 to 5% move in Bitcoin. All right. Those are some crazy stats for you. So here we go. Let's take a look at it. Let's see. So we're on a 45-minute. Let's see if we can spot it. Well, here we go. Let's see. So we've got a hidden bullish divergence. We've got price creating a momentum wave, creating a low low. All right, you see that? Momentum wave creating a nice low low there. And then we have our price creating a higher high. What does that mean? That means we're heading up. We're heading up. And it tends to happen in a range continuation, kind of like a bull flag, whenever you see a bull flag. So as you retail traders know, this is a bull flag. Bang, bang, bang. All right. So that's what we tend to see. So definitely backtest that. Have a look at that. Spend an hour on the charts tonight. Have a look at that, or take some time off your 9 to 5. That's paying you pennies, and put some time into what's actually going to pay you, right? Okay, so let's see. I'm going to see if I can find a few for you guys just to show you that it's real. It's a real deal. So look, we have another one here. So we have momentum wave coming down. All right. So I'll get this out of your way. This is why I say get Market Cipher, guys. I've got no dealings with Market Cipher. I don't get paid by Market Cipher, none of that. But it's just a great indicator. So look, we've got that momentum wave, and then we've got the same thing. Bullet drive. Guess what happens after? Bang! Look at that. As soon as you see that, enter along there. Look at that, man. That would have predicted this crazy rally up. That crazy rally up. All right. I don't have time to show you more. I would if I could, but I haven't got time. Why? Because I want to show you what you need to look forward to next on this trade. So if we go back to our current price action, well, undoubtedly we're in a range. All right, we're in a range. We've broken out of this range. As we've broken out of this range, we expect a retracement. Where does that retracement? Where would we like that retracement to happen? Well, ideally, we want to see it at a supply zone. So let's take a look, see if we've got any supply zones. I believe we have one on the 1 hour. Oh, no, we don't. Oh, that's a 2 hour. So we'll drop down to 1 hour. There we go. Let's draw that in. We pop that as a supply zone. That's a 1 hour supply. I believe we also have a supply zone. If we drop down to the 15 minute, yeah, bang, this is really good. So we've got another supply zone there on the 15 minute. So I'm going to draw that in as well. Okay, pop that in, 15 minute. So ideally, I would like to see price come back to one of those levels before I look for a next long. Okay, but not just those levels, right? Because those are great levels for myself. I know price does what it wants. Bitcoin has a mind of its own and it can do what it wants. And so basically, I'm also going to say, why don't I add some confluence into these zones? Why don't I see what Mr. Fibonacci is saying? Now, Mr. Fibonacci, from the range low to from the swing low to the swing high, if I see where that golden pocket is lying, oh, look at that. That's also coming in at our golden pocket level. We like to see that. We like to see that. So I'm going to change that to green so I know what that means. It's golden pocket. All right, good. So that's a key zone for myself. I'm also going to say, all right, do you know what? Let me take that fib. Let me take the fib from this swing low. Let's just see where that's coming in. Okay, it's coming in around there. Not too bothered. All right, then let's take a look at where the volume is being traded. Where did most of our traders get active? Where will they act? Oh, look at that. We've got a POC coming in at that zone as well. Now, do you think it's coincidence that you've got a fib level at that zone and a POC at that zone? I do not think so. All right. So therefore, this is a key zone for me to watch out for. This is also a key zone because this is a value area low. All right. Now, I would like to see it rebound from this zone. The reason I want to see it rebound from this zone is because the moment price starts to come down all the way down here, all right, and loses this level, well, we're so close from this low, aren't we? All right, so there's a chance it just comes down and takes it, you know? So that's worrying, all right? So in order to maintain this nice, juicy, friendly uptrend on a higher time frame, I want to see something like that instead. Okay. Now, I'm not saying price can't just come back and retrace here. I'm not saying this retracement can't simply take place here. It can. And because I know it can, that's why I'm also going to say, well, I'm also going to look for a trade at this range extreme. All right. Because remember, whenever price breaks out of a range or a bull trend or a channel or whatever, or EMA, it likes to retest it. So I'm also going to say, well, this is also a level to look for a trade. And I'm just going to extend this line here and say, I'm going to look for a trade there. Why not? Okay. These are continuation plays. 1, 2, 3. Ideally, I want to see 2 happen. So how is 2 going to happen? What if, let's look into the future. If 2 is the continuation play, so if this is what's going to happen, all I'm going to do is look at a 10-minute or 5-minute market structure, see how price comes down. If it gives me a nice flipping market structure as I enter my zone, I'm in. Simple. Simple as. I'm in. All right. Ideally, that will, invariably show itself with a nice bullish divergence on the market cipher as well. All right. So that's what I'm looking out for. So where am I setting my alerts? Well, alert number 1, I want to see what happens there. Alert number 2, I want to see what happens there. Okay, so alert number 3, I want to see what happens there, but I won't be happy if it comes all the way down there. All right, but that's it. Those are my next trades. Those are my next longs. All right, so I'm going to just pop that in there just for completion's sake so you guys know what I'm talking about. So long number 1, long number 2, and last but not least, we've got long number 3 over there. Okay, so that's it. All right. Now, what else can price do? Well, yes, price is tending down. It's having that retracement. That doesn't mean it's going to come all the way back down. It doesn't have to. Instead, price can decide, well, I'm not going to come down. I'm going to come down a tiny bit, and then I'm going to come and range here for a bit. Okay. Now, if price does that, I'm going to be waiting to see what's going to happen at this range high. If I get a nice trade at this range high, I'm going to be looking to prioritize a short there. Okay, if I get a nice range trade there, I'm going to be looking to prioritize a decent short. That would be a beautiful second entry short, but I'm not entering that short until I get confirmation. What is that confirmation? Confirmation looks like this: a break in market structure, basically. That nice little break happening right around there. Okay, that will be my confirmation for that trade. All right, price could carry on up. That's fine. I'm prioritizing longs right now, so I would like to see 1, 2, or 3 play out rather than 4. Okay. But if 4 plays out, I'm in. All right. But congratulations if you took maybe this trade or that trade. This was a risky one, or this trade here. Congratulations. All right. I hope you have found this useful. And at the moment, I am quite busy at the minute. but I'm putting together a course where I'm going to detail all of this information, all the techniques, all the strategies, all the nuanced ways to look at structure and supply and demand and liquidity. So you guys are perfectly equipped to do it for yourself. All right. Anyways, feel free to hit the follow button if you found this useful. Hit the like button, follow us on YouTube, and hit me up on Discord. I will see you tomorrow.